I'm hoping that people will hear you, because the next topic I kind of want you to speak about, and I know it's basic for you, but once again, our listeners and viewers need to understand risk pooling and what that means from the standpoint of life insurance and annuities when we're talking about implementing these strategies, if they are suitable and appropriate for them. So can you kind of give us a basic view of risk pooling?
Sure. Yeah, and risk pooling, so we had traditional company pensions, especially in the post-war era in the United States. You work for 30 years and then 60% of your, I mean, however it worked, but like 60% of your salary gets replaced and it lasts for the rest of your lifetime. That traditional company pension pools both market risk and longevity risk. And what that just means is I'm not taking any risk about what the financial markets are going to do or how long I'm going to live. My employer is taking that risk. Over time, they're going to be investing to pay these payments to me, but they can, because different workers are starting their careers and ending their careers at different times, the employer can focus more on providing a pension that matches the average market return over time. And then also they know as well, some people will not live very long in retirement. Other people will live longer. Mm-hmm. So if I'm trying to manage that risk on my own, I have to be worried, well, what if I retire when markets go down? And what if I retire and then it's good that I live a long time, but it's just, then it's a lot more expensive for me to fund my retirement. Well, the employer could pool that risk because they can pay everyone the pension based on an average lifetime. It's like your pension's based on, you'll get an average market return and live an average length of time. And it doesn't really matter what happens in your individual circumstance. You're protected. Even if if you had been investing that money on your own, you would have got really poor returns and you end up living a really long time and can't afford to pay for the retirement. The employer took on all that risk. But that traditional company pension, for most people, they still exist, but they're much rarer these days. And an annuity is a way to build that pension on your own through an insurance company, where the insurance company will pool that risk. And especially it's the longevity risk. If I'm 65 years old, I might live to 68, I might live to 98. I don't know. I have to worry, if I am worried about this, that plan more, what if I do live to 98? And then I have to spend less to stretch that money out for longer. The insurance company, though, has the actuaries who are figuring out, well, if the average person lives to 86, then I can pay everyone who buys that annuity a higher level payment because I can pay everyone like they're going to live to 86. And then for those who end up not living as long, that money doesn't go to the insurance company. It goes to the other members of that risk pool who do live longer.
There you go.
And so if you live a long time, it's great from the perspective of you got your money's worth out of the annuity. But given that people don't know in advance which group they're going to fall in, it helps to raise the standard of living for everyone in the risk pool, because everyone can now spend like they're going to live to 86 or just however the life expectancy, rather than being worried, well, what if I am the one who makes it to 95 or beyond? I can enjoy a much higher standard of living because I pool that risk through the insurance rather than accepting and taking on that risk on my own and being forced to spend less as the only method I have to manage that type of risk.
And I am always breaking things down to a very simplistic level, because people always say, well, what's my return on investment or something like that? And I'm like, there's no ROI until you die. Up until that point, it's a transfer of risk.
Hey, Stan the Annuity Man here. Did you like that little taste of my podcast, Fun with Annuities? Hey, if you want to see the full version, click the link and watch the whole darn thing. Remember, Fun with Annuities. Live in the reality, not the dream.